The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
This is Africa Diaspora Connect.
Join us as we take the journey from the motherland to America.
We share our experiences and learn from them.
Here is our host, Kibathi Gaturu.
Hello, and good evening, my fellow ADC followers. This evening, I'll be hosting a monologue as part of our podcast to enlighten you on taxes. Taxes are a fact of life in America, and so are annual changes on how you file and calculate your federal income tax. But the current pandemic will mean even more on how you calculate your income, and in fact, the IRS have added more forms to go alongside the stimulus packages that were given and approved by the Congress during the 2020 financial year. We shall cover 5 basic topics. Most common income deductions forms that you need to file your taxes. This is on your checklist. The forms that you need is a W-2 for wages, salaries, and tips. Interest income statement from your bank and from your other interest accounts. Dividend income statement from DIV. Sales of land, stock, etc. for capital gains from 1099B. Sales of real estate from 1099S. State tax refunds from 1099G. Alimony received or paid. Unemployment compensation received. Miscellaneous income form 1099, retirement income, 1099R, social security income, and railroad retirement income from SSA 1099, business income and expenses, rental income and expenses, farm income and expenses, form K1, income from partnership, trust, S-Corp, C-Corp, and all that, tax deductible miles traveled for business purposes. Now, ladies and gentlemen, here we go. On December 27, 2020, the President signed the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act, the Economic Aid Act. The Act authorizes the SBA guarantee PPP loans. PPP stand for Paycheck Protection Plan. Second draw loans are generally the same terms, conditions available for the original draw PPP loans established by the CARES Act. What you need to know as a borrower is eligible for a second draw of PPP loan if it has 300 of your employees and experienced a revenue reduction in 2020 relative to 2019. What does that mean? That means if your income for 2020 was greater than what you had in 2019, then you might not be eligible. The borrower must have experienced revenue reduction of 25% or greater in 2020 relative to 2019. Second draw loans are forgiven if the loan proceeds are spent on eligible payroll cost and eligible non-payroll cost in the covered period. What does that mean? The IRS is forcing everybody who had a PPP loan to apply for forgiveness. That's the only way they can know that you actually used your money in the right way. Community financial institutions will begin to make a second draw loans, which was supposed to be yesterday, Wednesday, January 13. That's what we have learned so far, my fellow Africans. If you own a small business and you like to check your eligibility, feel free to inbox me. SBA and PPP loans program is back. The funds can be used for the following. Number 1, you can use the fund to to fund your business payroll and payroll benefits. 2, payroll mortgage interest if your business owns a building or you have registered your home as a place of business. Pay rent and utilities. And number 4, pay for property damaged through the looting and vandalism. Buy company-related equipment, for example, a snow plow. If you own a company that has machinery, then you can buy the machines and you claim the money as part of your forgiveness. There is a form called 3508. There is the simple one called Easy, and there is 3508 SE. If you need help with that, you can contact me and I'll help you how to fill it. Recovery rebate, this is where the thing is. The thing is, when the president signed the bill on December 27th, the economic rebate received in 2020 was an advance. The advance need to be reconciled with your 2020 taxes. If the taxpayer received less as an advance than he or she should have, they might be able to claim the recovery rebate credit on their 2020 return if one of the following applies to them. Number one, they didn't receive an economic impact payment. They are single and their payment was less than 1,200. They are married filing joint for 2018 or 2019 and their payment was less than 2,400. They didn't receive 500 for each qualifying child who received too much of an advance rebate because the payment was based on their 2019 or 2018 income tax. 2018 income does not need to repay the excess when they file for their 2020 taxes. What does that mean? That means if you did not receive your 2020 rebate, the 1,200 for singles, $2,400 for married, and $500 for each child, then you can claim that money when you're filing your 2020 taxes this year. And by the way, the tax season open on January 27th of this year, goes until April 15th of this year. And you are required to file your taxes and claim that money on your recovery rebate. There is a form that is coming up very soon whereby you can claim the money if you did not get the money. And in case you got the money based on your 2018 income and your 2019 income, 2020 income was higher, then you have to refund the money to the government. COVID-19 Relief Act includes a second round of 2020 rebate payments. The payments are $600 per adult and dependent child. That means if you are single and you have one child, you get $600 for yourself, $600 for the child. If you are married, you get $600 for yourself, $600 for your spouse, $600 per every child who is at the age of 17. If your child is over 17 years old and they don't file their own taxes, then forget the $600. Adjusted gross income AGI thresholds applies at $75,000 for single taxpayers. This is the same we had last year in April. 100,000, 112,500 for head of household, and $150,000 for married filing joint. 2019 AGI will be used for paying out the rebates similar to the earlier advance. A larger rebate can be claimed on the 2020 tax return. So what does that mean? Not everybody qualifies for the tax rebate. Not everybody qualifies for the stimulus. You must meet the threshold of under $150,000 for married filing joint and $75,000 for single and $112,000 for head of household. Head of household is whereby you are claiming, for example, I'm single and I'm claiming my children. All you are single and you are claiming your children. Married filing jointly normally means you are filing with a spouse. Can be your wife, can be your husband, it can be your whoever you are married to, but you need to do married filing joint. There was an issue that has been going on. 9 million Americans so far have not received the first package of the stimulus. That means now you have a chance when you file your taxes for 2020, you can include that and request the money. If you do married filing separately, it's tricky because if your spouse did not file married filing separately, then it shows that you are dependent to your spouse, maybe who did single or maybe did head of household, but they did not include you and say, hey, I'm married, but we are filing separately. If you have any question, please feel free to call me. The money is out there. The IRS is giving the money until direct deposit, I think until end of February. If you don't see your money, you can go to the IRS portal. Where is my payment? Log in there, put in your social security number, your date of birth, your address, and find out where your money is. That will be it for tonight. Thank you for joining us on this tax journey. Please like the episode, subscribe to the channel, and hit that bell icon to be notified when every episode is released. I'm out of here, Sam Njenga, aka Big Bogo.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.